Good morning, traders. I am Stephen Davis, Senior Market Strategist, RJO Futures. It's Friday morning, March 27th, and we're here to talk to you about the grain markets. Okay, we're going to put the first chart of corn here up in front of you, and these corn prices are getting cheap here, and it's last year at this time, the middle of May, the end of May, the corn market started rallying because of the wettest spring that we've ever had. So as we move into April next week and May, if it stays wet, the corn market's going to pay attention to this, and we'll just have to see. March 31st is the big planning intentions report next week, and maybe the USDA is going to come out and say 95 million acres of corn being planted, and that's going to hold back any rallies in corn here. However, these corn acres are not in the bin just yet, so weather will be very, very important in the next 30, 40, 50 days, so we'll keep an eye on that. Mexico, for example, is in a recession now, and Mexico buys a lot of U.S. corn from us. They buy a lot of U.S. hams from us. So, we want to see North America here, the demand front, work on all cylinders, and with Mexico in a recession, that's holding us back. So I think this March 31st plannings report here, you're going to get a bullish corn stocks report. There's not the corn stocks around that everybody thinks there is. And one of the million-dollar questions will be how the market responds to this. So we'll be talking about that next week. Okay, the soybean market here, and here we are, a chart of soybeans. You can see option expiration today in April. So I think the $9 level and the 50-period moving average is 904. I think that's kind of the pivot here in the soybean. Above 904, the market's good in the short term, and below there it's not so good. So we'll keep an eye on that level. It seems that 50-period moving average, traders are keying off of it. Soybeans in China have been rallying, so, the China middle class, they're more like ours now. They want more protein. That's what soybeans is, so we'll see. It seems like the worst of this virus is over here in China. China's been buying U.S. corn, U.S. sorghum, U.S. barley, so we're just waiting for them to open the gates and buy U.S. soybeans. So Argentina, it's hard, it's not clear. Argentina, the biggest soybean meal shipper in the world today, and this coronavirus and the controls that Argentina is putting in place, not quite clear. This is why the soybean meal market has rallied here gigantic in the past week, and there's always rumors of strikes at the ports in Argentina, and they did shut down 5 of the soybean crushing plants, so we'll see about all of that. Now, the wheat market here, you're getting good leadership in wheat. Remember last week, these long-term charts on wheat look good. And, wheat, the consumers of the world are rushing to the grocery stores and buying bread, for example. And so perhaps wheat can give strength to corn here going forward. And Russia, the biggest wheat exporter in the world today, well, they're talking about canceling their wheat exports. And they can talk the wheat market up by comments like that. Russia, a big agricultural exporter, a big crude oil exporter, so they can move markets with comments that they make, and I think that's what's going on here. So on the demand front from the world, we are seeing Taiwan buying U.S. wheat. We're seeing Iran and Turkey in here, rumored to be buying U.S. agriculture. Pakistan, for example, has suspended their food imports, so we want to see the whole world in here buying our grain markets, and perhaps that's what lies ahead. And really, the only certainty we have here today is the uncertainty of this virus. News flow today on this Friday, the Japan Nikkei having its biggest weekly gain ever in the history of our markets. And, we get behind this virus here. I think these are going to be headlines you see from more of the developed markets. And the only thing more contagious than a virus is the hope and the drive of the American people. Let's all have an excellent weekend.